Hello and welcome to part 4 of our Volunteer Income Tax Assistance Training for VITA Services for West Michigan. My name is Amanda Grover and I will be moderating this portion of the training. Today we're going to focus on adjustments, deductions, so either standard or itemized, as well as exemptions, so going into personal exemptions and dependent exemptions. So we're going to go ahead and jump right into this information. Adjustments are done directly after the income information is put into the tax return. So some questions will come up in your software, just seeing if you're alluding to any of these items so that we can get income information put in for any adjustment that the taxpayer may be eligible for. Now, some of you may be asking what an adjustment is. So to some of the income information, it can actually reduce the gross income and create what's called the adjusted gross income. And there are certain costs that you can use to reduce that gross income. And what that equates into is once you have a lower adjusted gross income, it actually lowers the amount of the tax rate. And so the amount of tax that's owed on that money. So use the intake and interview form. It's a really good tool and it's created specifically to be designed in a way to help you identify if somebody has any adjustments. So make sure you're going through there and that you can identify and talk to people about adjustments. So some of the most common adjustments that we see are educator expense deductions. So if somebody is either a teacher or a paraprofessional, if they're spending money out of their pocket, especially for items in the classroom, so it might be tissues, it might be coloring pencils, any sort of supply for the classroom, a teacher or educator can go ahead and reduce their gross income or use this adjustment that's worth up to $250. There's also moving expenses which can be utilized if that's the case. If it's not for the military, then we have to refer the client to a paid preparer. But if it's for the military, we have to find somebody that's within military scope to do the moving expenses. The self-employment tax, so if somebody files what we call the Schedule C, so if you remember from the income section, if somebody has their own business, then we can go ahead and half of the amount of their earnings can be reduced from their gross income, and that's called the self-employment tax. So the software will automatically calculate that figure and will put it right into the list of adjustments that can be taken. Something else that you'll see very commonly are student loan interest deductions and tuition and fee deductions. So the student loan interest can be worth up to $2,500 and it'll be reported on what's called a 1098 E, I believe. And that form will go ahead and let you know what the exact amount of interest that somebody paid so that you can reduce that from their gross wages as well. If somebody does not qualify for either of the education credits, you could also put tuition, so money spent out of pocket, on as an adjustment. This typically is not the most advantageous to clients or to taxpayers, so just first make sure that they actually are not eligible for any of the education credits, in which case you would then put those costs of up to $4,000 over here under adjustments. So that's available as well. This is an example of that student loan deduction. So this is the form that you'll see it printed on. The client absolutely has to have this form, otherwise there's no real way for you, the tax preparer, to know specifically how much they spent that was towards the student loan interest. They may be able to calculate how much went to that student loan, but you don't know how much of that income or how much of those payments went towards interest, which is what you need to know in order to put this information in and have the software calculate it for you. The software will also ask you to enter information or calculations. Again, that self-employment tax is automatically calculated, so there's not really much you need to know about that. So once you have the adjusted gross income, Again, the tax software calculates the gross income, but you're basically taking the total income and reducing it by however many adjustments that you have, and then you'll have the gross income. Now, the next thing that the software is going to do is it's going to try to identify whether it's more advantageous to do a standard deduction or to do any other deduction. And so there's either, this is what it looks like again in the 1040 form if you follow that, but you're going to see if you want to itemize or take a standard deduction. And so what that basically means, and this is actually where it goes in the 1040 form if you're following along, this right here on line 40, although the software doesn't make you enter anything in by form number. So know that there's two types of deductions. There's a standard deduction, which is a flat rate that's already determined by the IRS, or there's what's called the itemized deduction, and that's where you can total up your various expenses and see if that's going to be larger than that standard flat rate that the IRS is providing to people. Now, I do want to say that for most people that are coming to the VITA tax sites, that standard deduction is going to be most it's going to be most advantageous for them. There will be a chart up in your volunteer information packets that you receive for the tax sites. There will be a chart with the standard amounts on it so that you know, like last year it was around $13,000, I believe, for married people. So if a married couple came in and you just kind of review, did you have any medical expenses or mortgage interest? Those are typically two of the highest things. If they didn't have anything that gets them anywhere close to $13,000, then it's typically pretty safe to assume that the standard deduction amount is going to be most advantageous for that family. So that's the biggest thing to keep in mind. The software gives you the option to itemize as well. So that way if you want to see if after totaling up these different itemization amounts, if you want to see if it's enough, the software will take whichever is higher. So it doesn't really hurt you if you put in the information, but it is time consuming. So I would recommend having some sort of an idea if you're needing to itemize. Then go ahead and utilize the software and its components to do that. But if the client isn't anywhere near the itemization amount, I'd just say hold off on it. So this is the standard deduction amount over here on the screen on the right side. Now this information is probably outdated for the upcoming year because this was last year's information. So, but it gives you a ballpark figure for and it's dependent upon the filing status of the client. So, but if they're not anywhere close to those standard deduction amounts, again, don't do the standard deduction because the itemizing isn't going to help, because if they itemize, it's still going to be less. It's going to take up your time as a tax preparer. But some of the items that can be claimed on that itemization, like I said, medical is a huge one for a lot of people. The state, sales tax, or income tax, property taxes, mortgage interest, mortgage insurance premiums. A lot of the time people will want to come in with information on charitable donations, unreimbursed employee expenses, so that might be uniforms that client or that the taxpayer is not compensated for. Tax preparation fees from the previous year. If somebody itemizes, they have gambling winnings, you can itemize their losses up to the amount that they win. So that's not, again, very common for the clients that are coming into the VITA sites, but it's still pertinent information to know. And it's still good to know this information in case you come across it when preparing your own taxes or a friend or a family member's taxes as well. So again, when to itemize, it's whenever these costs that can be itemized, whenever they are greater than that standard deduction amount. So again, I know I already alluded to this, but that mortgage interest, that's going to be huge. And that's typically the number one thing we're looking for when we're looking at our clients' situations. That mortgage interest is typically what will put them up and over the amount that makes it so that they should itemize. So we've kind of gone over when to itemize. And so you want to know how to itemize. You'll have to take a look at the various items that the IRS will allow you to deduct and make sure that you have documentation on all of those items. So if it's a mortgage interest statement, it's that's that 1098 E, I believe, is what it is, or I. Um, yeah, because the 1098E is for the adjustments, but that 1098I is for that mortgage interest, and you'll want to use that for any of the mortgage interest that you can deduct. But this is what's called the itemization form. It's a Schedule A. You can always print one of these out. I print them out at the tax sites for people a lot of the time when they ask me what items they can itemize, because it's a full list of everything that you can. I show them this section over here that's to the far left that kind of helps keep it categorized as to what may be applicable for them. So I try to show them how the Schedule A form itself works, so that way they can come into the site the next year if they think they're going to have items, and they can kind of help organize some of their information prior to getting to the tax site. So this is what the Schedule A looks like. Again, in the software, it's not going to look like this. It's not going to be a form you fill out. The software will go through and will just ask you to identify if any of these circumstances apply to the individual, and if so, then you can go ahead and fill in the information. But again, just like with doing your Schedule A's and doing your schedule, just like doing your Schedule C, you want to have a paper trail of everything. Even if they have it on one form written down, they need to make sure that they have a paper trail ready in case the IRS comes to audit them or do some sort of a review that will require that documentation. So again, just make sure that the documentation is in place. So again, just for adjustments and how to take those adjustments and how to do the standard deductions, make sure that you're going ahead and going through that intake and interview form. So they should be outlined here. Just have a conversation. Make sure you're not missing anything. The one thing that I do want to say is if somebody is doing a married filing separately sort of tax situation, then if their partner or their former spouse goes ahead and files separate or does the itemization, the taxpayer themselves have to do an itemization as well, which kind of sinks, which is why, again, we always encourage people to do a married filing joint return. So that itemized deduction, it's put into the tax software, and it reduces that, that taxable income again as well. So, or it basically increases the deduction amount, which goes back to reducing the taxable income. So you want to make sure to do your due diligence to make sure you're not missing anything. Again, we're going to just stop and talk about a few of the items that can be itemized, but make sure that you're including any medical expenses that total the amount above 10% of the adjusted gross income. Again, the tax software will go ahead and calculate this for you. But what medical expenses that includes are anything for the taxpayers and their dependents, anything that's non-cosmetic, either medical, dental, and or vision. You can utilize mileage if it's for a medical appointment or medical education program. So if somebody has to travel to University of Michigan often, that is great. You can utilize that in a medical expense. You just have to make sure that they follow that up with some sort of written documentation. And it's only a portion of the amount per mile that can be spent for this itemization. It also cannot include vitamins as far as the medical information goes, and it has to be what's out of pocket, not what's billed. So it's almost like double dipping if you try to do something where you count maybe where you count something that insurance covered or something. So they don't want you to double dip. They want to make sure that they have expenses of yours that are out of pocket. Again, the software will do a lot of the calculating as to what can be allowable and what can't. So don't stress out about that too much. And then the sales tax or the income tax, that actually automatically gets carried over. So that's not anything that you have to input into the software. The property taxes, so here in Michigan, there's a couple of ways to find out how much the property taxes were. You can either find it on the mortgage form, and hopefully the clients bring that in. They typically do. This isn't one of the forms that we typically have too much of an issue obtaining. So a lot of the time the clients will already bring in their mortgage interest form, so that 1098 is what it's called. And so you can get the property taxes right off of that form. Otherwise, the client may bring in twice a year, both in the winter and in the summer. People in Michigan have to pay their property taxes, so they may bring in a bill that looks like this that's on the screen in front of you, and that's a property tax bill. And so they'll look a little bit different from township to township or from city to city, but it's really generally will have this sort of format on it in Michigan, or at least in the greater Muskegon area, including Newaygo, Oceana, and Ottawa counties. This is approximately what it looks like. And again, over here, it'll have the total amount for that property taxes that you'll be looking for to put into your forms. So sometimes somebody has property taxes that are exempt if they're low income. If that's the case, then obviously you don't have to do anything with property taxes. And if that's the case, they probably actually aren't going to do the itemized deduction. So you typically don't run into a situation that has both of those situations going on. This is that 1098 form for that mortgage interest. Again, it's just showing you where the real estate taxes is so that you have a visual cue as to where to look for that at. Make sure you're putting the proper information in the proper place though, because it does allow you to claim mortgage interest as well as mortgage insurance premiums and the real estate tax. So if somebody brings in this 1098 mortgage interest form, that really has a lot of the information that you'll need in order to do the itemization if somebody's itemizing. So again, a very important form. This is where to find each of those information lines as well. So charitable donations, this is something that I do want to spend just a little bit of time on to make sure that you understand. They must have, if somebody comes in and indicates that they've had a charitable donation, they have to have written documentation for anything that's over $500, and it has to be to a nonprofit charitable organization. They can also claim mileage if they have not been reimbursed through the organization. They can do volunteer mileage as well. The big thing that we want to make sure that people understand is that charitable donations really come into play when somebody is itemizing. So unfortunately, we get a lot of people coming into the tax sites that will come in with tons of different contribution receipts, and they think that they are going to itemize their taxes and get some sort of a refund for that, for those donations. The unfortunate part is that a lot of the time people don't understand that there's really no point in claiming those deductions unless you have taxable income. So a lot of the time what I'm seeing most commonly at the tax sites is that clients are coming in with these charitable contributions and they have just Social Security, where they're not even having to pay taxes on any of their income. So once that's been reduced to zero, it can't go any further down, and there's no refund that can be created. If you've reduced the taxable income to zero already, there's really no point in doing this whole itemization piece, because once you're at zero, you can't get any lower than that. So again, there's some work-related expenses that can be mileage, it can be training, uniforms, I mentioned those. It could be supplies for work, so building materials, that sort of thing. Anything that you haven't utilized on your Schedule A in your income section, you can utilize on this itemization of deduction section for the itemization. Other things that are included are union dues. Those are typically printed on the W-2s, and you can utilize those if that applies. And then you can also do anything related to job search as well. Rules are similar for businesses. So again, businesses are utilizing their own itemization piece. Home office, now that's something that we don't typically start looking into. We don't do depreciation or anything like that. So that you probably won't see in your itemization section. Again, I did mention that there are tax preparation fees, as well as safety deposit fees. Now, these are both still current. That may change in this upcoming election. If there's any changes, you can go ahead and let the client know. It'll be updated in the software as well as in all the resource information. But as of right now, those are some miscellaneous expenses that can be claimed on the itemization. Also, too, I did touch on this, but gambling losses, if there are winnings being claimed, the losses can be claimed up to the winning amount. So standard or itemized, again, you'll want to defer and kind of explain to the taxpayer, but ultimately it's their choice. The software will automatically choose which is higher so that it can help the taxpayer to the greatest advantage. But in the end, the taxpayer is responsible for choosing, and so make sure that they know that and that you have a pretty good understanding of what to itemize and what not to itemize. There's some really great examples in some of the upcoming materials that we have. So make sure that you're going through some of those practice problems on itemization. It just takes getting a couple under your belt. I know it sounds kind of confusing, but it takes getting a few under your belt and then you'll be just fine with any of this information. The last thing under this whole section that I want to talk about and jump into are exemptions. So the nice thing is that the software will automatically calculate your exemptions for you, but I do want to make sure that you understand what an exemption is and how it plays a role in your tax preparation. So jumping into exemptions and what those mean, you'll see on your screen that it's line 42 is where your exemptions fall into place, and that's again just if you're following the 1040. You won't typically see this 1040 form or anything in its format if you're just going through our tax software. So exemptions, again, there's two kind. There are personal exemptions, so that's just for those who are filing, so either the taxpayer and or the taxpayer spouse. And then there's dependency exemptions, and those are for either a qualifying child or a qualifying relative. Again, if you've indicated everything properly in the filing status section at the very beginning of the tax return, these exemptions will automatically calculate into the tax return, and it takes the guesswork out of it. So a taxpayer can claim their own personal exemption if no one else claims it, and they can also claim it for their dependents. But an exemption is basically a figure amount that assigns a value to the cost of each person on the return to reduce the taxable income. So again, this is something that the software calculates, but it's good to know and to be able to explain, because you can't use somebody's exemption and not use them on the tax return for something like the earned income tax credit. Also, so as I indicated in the previous slide, you may have somebody claiming a married filing joint return. It'll automatically, knowing the software, it'll automatically know that there's two exemptions in the home, and then it will calculate for any of the other dependencies. So whether they're a qualified child or a qualified relative, it will just determine that that person can be claimed on the return and that they have an eligible exemption on that return. So what if there's somebody that's filing their tax return, but they can be claimed on their parents' tax return? So say they're 17, they've got an after-school job, they're going into the tax site to file their tax return, which they're eligible to do. You want to make sure that you know if they're being claimed on their parents or not because of this exemption. So if they're not sure, then I would just assume that they're being filed on another return. In which case it gives them a zero exemption, and they basically will get back their whole withholding because their standard deduction will reduce the taxable income to zero anyway. So not a huge deal there. What it does, you can see, so this is where you can kind of see the math line up and how it's calculated through the software. It's done through this whole process that's on this 1040 form. So up here at line 38, we started the this whole section of the training with the adjusted gross income, and then that itemization amount, whether it's standard or itemized, that deduction can go ahead and be applied right here. That will reduce the gross adjusted income. And then each of these exemptions is worth a dollar amount, and that is then applied to the taxable income. So it's not until line 43 right here where you actually have the amount of income that's being taxed. So first you have your income, then your adjustments are applied, then your deduction is applied, then your exemptions are applied, and finally after that, that's when you have the taxable income. So what if there is nothing that you can do any further? Once you have that taxable income, what should be happening? So after that income is introduced, then you can go through some of the credits and some of the withholding that's applied and hopefully end up with some sort of a tax refund. But we'll go through that whole section as far as credits and tax withholding, what's done after here. I just like to talk a little bit about that exemption, the adjustments, and then the deduction. So if you have any questions on any of those, it's Carl Lewis is always a great resource. So I do want to encourage you to make sure that you watch the next module as well. I think it'll help put some of these things into place. Also, some of your practice problems and issues are really great circumstances to go through and really great exercises for you to put all of this into place. So again, make sure you're utilizing your resource materials as well as your volunteer training page to go through some of this information. It will all start clicking, I guarantee, once you put it all together into a tax return. And then that's going to take a little bit of practice to get used to as well. But the parts and pieces that I'm discussing through these trainings will start clicking in at that time. So again, just thank you for tuning in. Make sure that you're doing your practice problems and make sure to watch our last module for the federal taxes on the training so that you have a good understanding of the credits and the withholdings. And then there's also some really great information here on our Goodwill training page. So make sure you're utilizing that to go through some of the software information. Carl does a great segment on our state and city taxes as well. So make sure you're tuning in for all of that. Thanks so much and have a great day.